Cash is king.
It's got to be the king.
And short-term signals go negative. Stay tuned, we'll discuss this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV. First up, don't forget to subscribe to our channel. Also below, show more for additional information and links on today's video, as well as information on how to contact me and access to my calendar if you'd like to set something up. So, first up, we have questions from one of our viewers. Kind of place this one on purpose. At the end of your video, you show your signals. How do you apply them? Well, it depends. Okay, so we have our short-term, mid-term, and long-term. Those who watch us regularly know that going into this quarter, I went to 5% in cash. That was for a couple of reasons. One, if I need to hedge if the market got soft. Two, I felt the markets had gone a little too far. And three, opportunity. So as I look at my short-term signals going negative on Thursday night's close, what am I going to do? Right now, nothing. I'm going to wait because I've got that cash. Is this another buy the dip opportunity, or is it more? And I'll show that as we go through the video, because I'm going to look for more long-term deterioration before I make any additional moves. But basically, the short-term signal going negative gives me a heads up to make sure that something bigger is not coming. So let's get to the numbers last week. Week ending 11/10. Wait a second, red. We have some red on the board. First time in 8 weeks we actually saw some red. So yes, the markets have finally gotten a little bit tired. It's time for consolidation, or to be determined. Let's go to the big charts. So first up, the Dow, before turning, it hit its 59th all-time high last week. And as I said, pretty clear picture here. At the top is RSI, relative strength. Finally, right, went below 70, so we've gone from extreme overbought situations to going below and trending lower. And at the same time at the bottom, momentum, MACD, has had a negative crossover, so that explains one of our short-term signals. The next thing is the Dow Theory. We talk about this, transports and the Dow. Look at transports really breaking down last week. And that is not a good sign, right? Transport is what's moving goods. So something we got to take a little bit closer look on as we go further, because that's a leading indicator, but not too much concern yet. How about the S&P? Well, you see here in the chart, September 6th is when our signal went positive to go all in. Okay, had a nice little run up. But yes, just like the Dow, consolidation, negative crossover, time for the markets to take a pause, it seems. Again, this is not absolutes, this is what we're looking at today. The next one, though, is the longer view. So the weekly view, that's going to be more tied to our midterm signal. What do we see here? We're still overbought up top. Momentum, maybe a little button hook there at the bottom of the chart where it's turning, but not yet. So the longer term view still looks pretty good. Now, something we've talked about for some time is S&P 500 versus the equal rate, right? Here we have the S&P going straight up, and then we have the S&P equal weight relative to the S&P, and it shows the big divergence. So what that tells us is there's not a lot of breadth in the market, okay? And we'll show you some more of that in a second. Next one is the Nasdaq. Same view, okay? We've gone from extreme overbought, a little bit of a button hook there on the MACD at the bottom. So it's definitely starting to turn down, and you see a little bit of a move on Friday's close, but we've gone up, up, up. So again, not surprising to see a consolidation, or can it be something more where maybe you get a bullish flag and opportunity, and that's why we have some of that cash on the side. But here's a view I kind of showed last week, but we showed the Nasdaq, which continues to go to all-time highs, and then you have Nasdaq 100 equal weight relative to Nasdaq 100, And that is ugly. That shows you that this is just a select amount of stocks that are driving the Nasdaq. I'm going to call it FANGs Plus, right? Not only did we hit an all-time low last week, but also we broke support there. So that is not a good sign as it pertains to the Nasdaq, which has been a big winner year to date. So again, talking about market breadth, okay, here's your 200-day moving average, your S&P, Nasdaq 100, mid cap, and small cap. So yes, we've got the little, the point going down, okay, but again, being a 200-day moving average, you're not going to have a swift move, but it's definitely pointing down. And then you look at the 50-day, above 60 bullish, below is bearish. Now, when you look here, we've got some pretty short-term divergence there going to the downside across the board. So that kind of explains why we're seeing deterioration on all parts of the market right now. Here was another chart we found last week. 42% of the return of the S&P right now is coming from 10 companies. I mean, that's crazy. That just shows you the breadth is not there. It's the big tech names that are driving performance this year. Something new, international. I'm going to show a couple charts here, really just to show pretty much like the US, except they started breaking down a little bit earlier than us. We've got negative crossover and momentum. RSI has already gone to some, not oversold because it's above 50, you got to go down to 30, but definitely seeing some deterioration there. How about the Nikkei last week? When you see that, wow, what a breakout they've had in the Nikkei. In fact, at the top, relative strength, 31-year high as far as being overbought. So you look at that, momentum's still pointing up, and you go, gosh, can they go any further? Yes, look at this. Here's the monthly chart. That's 1990, where they were an all-time high. So you break out of a 26-year consolidation. Huge. So that's actually pretty bullish right there in a Nikkei and should be some opportunity. Now, again, I think we're pretty overbought here. I'd be very cautious to jump in, but I'd follow that because it clearly looks like there's some opportunity there. Let's go to our sectors. First up, the banks, no surprise. As Treasury goes is how the banks go, okay? So last week, Treasuries went down and brought the banks with them. So we got in this at the beginning of the third quarter. Still a nice trade, broke through there, but we've got some decent support. At the end of the week, we stalled and moved back up on Treasuries, so not too concerned here. Next one is healthcare. We got into this quarter, kind of a flat trade, but there's your support. Very evident. I'll have Michelle zoom in there. Let's see what happens this week. You've got the 20-day ready to go over the 50, so a little not nervous because I don't get nervous with this. It's about the facts, but let's see here. Hopefully we can bounce off support and finally see some life in the healthcare sector. On the last sector is oil. We talked about this last week. Broke out of a big-time consolidation, but getting a little bit overbought. So let's see what happens this week. I think it's time maybe for a consolidation. So if you have not already gotten in, as I said, we jumped in here with a few clients last few weeks. You know, I'd be cautious this week at these levels. Let's see if you get a little bit of a consolidation before we have another leg up. So last year we got the Treasuries. As I said, we've gone up. The main thing here is 10s and 2s. We got down to 0.67 last week. We did have a move back up to 0.73. You know, again, not overly cautious, but that is a sign that we continue to watch if we can hold there. So final observations, some big charts. Here shows fund flows, okay? Individual investors. And it's pretty evident, right? Everybody's all in. That's a concern, okay? That's that contrarian view. Then you look at, this is the institutional money managers. Well, guess what? We look here on the right-hand side. That's the lowest level we've seen in some time with institutional money managers. Do they know more? Well, we'll see, okay? And I pointed out some areas there, but it's been a while they've been this low on their allocation to equities. And then volatility. Volatility continues to be anemic. Had a little bump the other day, but came back in line. As we call this here, the everything bubble. And you look where it is, the S&P on the bottom. At these extreme lows, you can stop this, correlate it, and look, it seems like, wow, are we overdue for at least a 5 or 10% correction? But to be determined. Next up, data, really quiet week. Here, just a couple items to point out. And then we have AAI, individual investors, 45% remain bullish. We actually had less on the bear side. So again, a contrarian view. Individual consumers getting a little too optimistic here. And fear and greed has come down to 54 from 69 a week ago. And as I said, signals, short term, negative. So right now, anyone that's in cash that are new, we've been bringing over, we're holding. We're in a hold pattern until we see a signal change. Midterm, long-term, no, continue to be positive. As always, we appreciate you watching. This is Michael Loftus for Wealth and Wisdom TV.